The Intel news, SoftBank buying a 2% stake, the possibility of the U.S. government maybe taking a 10% stake. What does that make you think about Intel and just the chip sector in general?
Yeah, Intel's been getting help from the government, whether it was the CHIPS Act or now the Trump administration. And what is it, Ronald Reagan that said, you know, the one thing you don't want to hear is the government, and we're here to help you. I don't know if this is going to be the turnaround that Intel needs. It could be great for investors because I think we have a floor now. This $20 level seems to be it. But let's see what happens. Too many people seem to be circling this stock like vultures, and I'm not jumping into it based on this news. That's for sure.
All right, looking at Intel shares right now, up about 6 1/3%, almost 6.5% just a short time ago.
Yeah.
I want to get to your word of the day. It's evanescent. So
yes.
What's evanescent?
Well, it's the feeling that we get when we have some optimism that could quickly fade. So as we go into Jackson Hole, we're trading at all-time highs. The most hated rally ever. It's slowly starting to turn, and that evanescence feeling will be something that optimism that quickly turns, quickly fades. Last time I was here, the word was digestion. We're still making new highs, but that momentum is fading. And I think, given the seasonal factors, September, October, or August, September being the two worst months, and seeing we're, not rallying on this possible peace news, a solid earnings season, I think it's time to give a little bit back. But to me, this will be an opportunity. But I think Jackson Hole, knowing Powell, knowing how that meeting has gone in the past, interesting things happen, and I have a feeling he is not going to just give us the roadmap to a rate cut.
Right.
He's going to make it a little tricky.
So you have some strong feelings about this, very clear. You clearly gave it a lot of thought. I want to bounce something else off of you from Evercore ISI. Julian Emanuel out with a note saying that a data-dependent Jay Powell, even though we know he's going to be a bit data-dependent, but not dovish enough, basically, because some people in the market want a 50 basis point cut and signs we're going to get more cuts. He believes, his thesis, if Jay Powell comes out and signals a 25 basis point cut and a data-dependent outlook for the rest of the year, we could see a pullback of as much as 15%. Between 7 and 15%. Do you agree with that take?
I don't think the pullback will be that drastic. I agree with the take. I think we're going to see a roadmap to a 25 basis point cut, the old data-dependent lines, and a pullback. But there are great levels to watch. To me, the 20-day moving average is what the S&P 500 has been climbing since April 23rd. We've only closed below it 2 times. That's 53.73. I think we're going to test that break and probably see a test of the 50-day moving average, maybe a 5% pullback. If we go back to the 200-day moving average, 7.5%. I don't see 15%. I think there's too much good news coming. The tariff tantrums seem to be dying down. So to me, I think we're going to see a bit of a pullback, but a good buying opportunity as we head into Q4.
Speaking of tariffs, your pick for today is one of the stocks that's really impacted by tariffs. We're going to reveal our mystery chart. It's Nike. We're also going to show the 50-day and the 100-day moving average. So you have a technical take on this company, and it also has some fundamental issues that you think it's working through under its new CEO?
Yeah, Elliott Hill's come in. He's finally put his stamp with the Win Now platform. He's bringing the athletes in focus back. You know, he was known for helping with that Jordan brand. Wait till they tap into Caitlin Clark. That has not even begun. And then when you look at the inventory concerns, those seem to be fading. And then the tariff concern, Vietnam, we finally got some resolution there. Let's see what happens with the China tariffs. But right now, the fundamental story starting to turn. He's putting his stamp on things. And then technically, you go back 5 years, this has been a consistent downtrend. We got a nice breakout gap on earnings last time. We've held that gap. If we can close above 80, we probably have a few more weeks, months to go before we break out. That is a breakout of a 5-year downtrend, 4.5 years to be exact. To me, that looks good.